Good afternoon, everybody. A warm welcome to everybody who's watching this session. A quick introduction about Nithin, founder of Zerodha, one of the most celebrated Indian startups. Changed the way broking is approached in India. Nithin personally is known for his very balanced views. Thinks through stuff before he says anything, whether in private or in the public domain. I don't want to say much more. I'll just ask Nithin. I'll ask you a fun question about you. Do you think you put on weight in the lockdown?
Yes, I did. I mean, the first lockdown was quite bad. I think I added like 8 or 9 kilos, and but then I made a comeback, so I'm back to my long-term average weight.
So quickly, before we jump into the question around ESOPs, your view about the last 12, 24 months from the perspective of the startup ecosystem in India. Do you think it will continue to grow? Do you think it will slow down? What is your outlook?
Yeah, no, I mean, I am like, you've known me for a while. I'm generally a more pessimistic kind of a guy. So, I mean, I've been very pessimistic about our business as well. And I haven't been this wrong about the outlook for our own business, because, so in the last March 2020, like I spent like quite a bit of time spending time with our team saying, it's time to get into monk mode. And after that, every time, there was a rush of customers, markets making new highs. I've been constantly saying, shit's going to hit the fan tomorrow. And now the team, keeps needling me and saying, when is it hitting? Fine. So I mean, it's, I think something has changed, right, for India. So there's a lot of interest and capital chasing India. Now, as long as that interest in capital continues to chase India, and I think India, to be very honest, is one of the last few countries in the world where there's growth, right? Because most countries are plateauing, and India, is still, you can still see some growth in India for a while. So it's capital, I think, will continue coming in. In the public market space and in private market space, maybe we are in the middle of excesses. I think it's just like we've been investing in private space, using the Rain Matter initiative, right? As in, it's ridiculous how easy it is to make money right now, right? As in the sense, I mean, some of it is notional. I mean, a lot of it is notional money, but still, right? As in, you invest and suddenly in 6 months, it's done quadrupled. And so it seems like, you're in the middle of excesses, just this whole, even this whole wage inflation, in the startup world, right? I mean, for the tech, etc. I mean, people jumping from one job to another, getting 100% bump, and then jumping another job and getting another 100% bump. I mean, it almost seems like peak.com bubble types, right? So, I mean, these are all the signs that seems that there are excesses. But the problem with bubbles, it's very tough to call them, right? As in, like one of the people I look up to is Ray Dalio, and he kept talking about a bubble in Nasdaq in '96 onwards. It took 4.5 years before it popped. So it's so you don't know. I mean, I think it's good times for now. So I guess as businesses, as people building businesses, the good thing is that you get to play the trend, right? People who trade stocks, right? The problem is you can get in and out of stocks very easily, right? As in, if you feel that market stopping, you will probably exit your stocks, right? But I think the good thing for founders is you're kind of stuck to the trend in the sense you can't just say I'll sell this company and I'll build another one tomorrow, right? It doesn't work like that. So I think I keep joking about it with the team as well, is that if Zerodha was a listed company and I held Zerodha shares, I might have sold some of it, in the last 1-2 years, and then maybe I've regretted it now. So because we are a private company and we didn't have that option, we continue to hold. So it's my outlook is that India long term there is growth, but short term I think we're in the middle of excesses. But it's very tough to call how
high or the low, right?
Yeah.
Sani, okay, quickly jumping into the topic of ESOPs. Last year or so has been pretty eventful, right? A little more than a year. ESOPs were in fashion, so to speak, in the 90s when the IT services companies gave out a lot of options, created a lot of millionaires. But the last, ever since then, you had sporadic announcements about ESOPs. But last 12, 15 months has seen a lot of action on ESOPs. a lot of announcements. Funnily, the unlisted companies have out-announced the listed companies. Buybacks obviously are irrelevant in a public space, but in terms of option pool creation, expansion of the option pool, everything has been really, really significant in the last 12, 15 months. And today, ESOPs have become a key part of the ecosystem, especially the tech ecosystem. Just wanted to understand Zerodha's perspective about ESOPs. In Zerodha, it's a little different, right? I mean, you've never raised money, you don't have investors. So the pressure of creating exit events are not there. Pressure of doing an IPO is not there. Traditionally IPOs and M&As have been the liquidity event for employees. There is no valuation benchmark really. I mean, Zerodha's valuation is really guesswork at the end of the day because there is no external validation. This makes it simple and complex. How does it work at Zerodha for options?
Yeah, no, I mean, see, firstly, I'll tell you why the rush of all this ESOP announcement, right? Like I said, right now, ability to attract talent is probably the toughest India has had in the last 100 years or whatever, right? Historically, right? So it's actually very capitalistic, in the way, today you're attracting, people to work by offering a stake in the business, right? As in, I think the rush is so much more because if you don't do it today, it's very tough to hire good talent. Now, with Zerodha, what happened was when we started the business, there weren't any, really large ambitions as such. So, I mean, this whole idea of ESOP, etc. I mean, I didn't even have it, when we started a business. We knew that because the reason we didn't have it was firstly because we never thought we were going to build a business of some serious value, right? This was for us, when we started was almost like, I keep talking about it, like how, in the old Bangalore, if you like music, you like beer, you want to set up a pub to get your friends in, right? I mean, it was almost like that, it was meant to be very, like for niche community, etc. And then I think this whole realization that we are building something of value happened only around 2015, 16, right? Because by then, we started growing fast, and then we realized that now that we have value, it's just we ideally should be sharing with everyone who's part of the growth, right? So that's when the whole idea of ESOP, I mean, we actually put out an ESOP plan and started kind of giving out ESOPs. But you've known me for a long time, and this whole idea of not raising capital has always been there. I think around 2014, 15 is, I think so when business started, Zerodha started in 2010, I hadn't read a business book in my life. I didn't know what CAC, MAO, etc. is. I mean, in a sense, I still remember going to a GSF event in 2012, and all these lingos being used, and I was like, dude, what's happening here? So my connection with the startup world only started happening around 2013. And so once I started meeting VCs, once I started interacting with other founders. So around 2015, we had internally, me, Nikhil, Kailash. I mean, we all sat together and we were discussing like what should be the long term, how do we build this? And my take on this was that see, in a business, to kind of win the race, or not even win the race, to stay ahead of competition, you either have to have the deepest pockets, or you have to be able to do something which deepest pockets can't do, right? As in, if something, you should be doing something that money can't buy, right? And the problem with this whole deepest pockets race is that you have to continue raising, right? As in, you have to then build a business a certain way, right? As in, you raise some money and then keep raising money, and it didn't feel the right way to take as a business. I mean, we enjoyed this whole freedom of being able to do what we want to do. I mean, like even today, I think the best part of Zerodha is the freedom that we enjoy. I mean, the moat we have as a business is really that we can do what is really right for the customer, even before what is right for the business. And it's very few people, I think very few of our competition can do it. And for us, in my head, as a long term, as a business, that moat is what is going to help us stay ahead of the competition. So ESOP kind of was the structure was thought through with this in mind, which is to say that we potentially may not ever end up raising money, right? So then how do you build a ESOP, like I said, right? As in, how do you give ESOPs and put some value to it eventually, right? Because eventually people need some value out of the ESOPs. Now, the good thing I think we did was, until date, we have 1100 member team. Not a single person has been hired promising an ESOP, right? Because one of my whole like one of my personal philosophies is to kind of under promise, over deliver types, because see, one of the problem in the current ESOP rush is that people are getting over promised. When you're hiring people, you're over promising on the current valuation, you're over promising on the potential future valuation of the business, right? and very easily it may not match that. Someone was saying Twitter's revenues has gone up 12 times in the last 7 years. The stock has remained the same. Right now, think of the guy who joined Twitter 12, like 8 years back. Think, you know what? My biggest component is my stock component, right? Its value will go up, right? Now a lot, Twitter would have lost a lot of talent because of that, or the talent is stuck around. They'll not feel as good about it, right? So the way we've always positioned ESOP is that as we do well as a business, we will make sure the winnings are shared, right? It's almost like a socialist way of thinking about this, is in the like everyone has to be play partful. But I won't promise you anything right now, be it how much ESOP you'll get, be it what will be the valuation of it, right? But based on, we'll have a general overall idea on, how much of the profits that we want to share with everyone on the team, how much we want to keep it as buffer to grow in the future. And the rest will kind of divide, So that's how, the broad structure was thought through. So the way we said that point of time is that we will take the profits of the year and we'll give it a multiple, which is how, every business should ideally be valued, which is, once the business is around for 5-10 years, I don't think, you can just value it based on growth. I think, in 10 years if a business is not making money, then probably there's an issue, So we said we'll look at the profit, look at the potential growth of the business, and then we'll give it a multiple, So the way we did, the first year valuation was around 20 times our earnings. So whatever was the profit, we did a 20x of that, and we did it in March 2020. Actually, I think we were one of the first companies to announce like a ESOP buyback. After that, there was like a rush of like a lot of other companies doing it. When this whole COVID hit, there was generally, like a lot of our team members, their family members were affected, etc. So we thought it's a good time to kind of give liquidity to all. And we said, in our ESOP plan, we had like this whole thing saying, we will value our company at a certain multiple of our earning based on our future growth. So we done it around 20 times. So it came out to $1 billion. So that was our first valuation exercise. And we had said that, between 10 to 15% of our profits is what we're going to distribute every year as ESOP, right? So I think we did around 75 crores worth of, of our all, of a net, I think, 70 crores was what we gave back to our team members. And the second year, the same thing, we did the same, I think 16x multiple. It came to like $2 billion. And, why? See, the thing is, I think the toughest thing about this valuation is this whole, how are you coming up with this 15x, 16x, So when companies are, valued at 1000x, 2000x, why are you being 15x, right? And I think the challenge hasn't happened. No, that kind of question has not been asked in the business, because this buyback is completely optional, in the sense we don't force anyone to do any buybacks. Every year, for whatever stock that we, ESOP that we buy back, we are issuing new ESOPs as well, a lot more than what is bought back. So it's not like we're trying to buy back the stock as such, forcing people to buy back. And also all our stock options come at zero strike, right? So that means there is no cost for the, it's almost like an RSU versus an ESOP, in the sense, right? As in, people are getting this as a, instead of getting, we give cash bonus, plus there's almost like a bonus that's coming in stock, which comes at zero cost for them, So that way it's been quite easy. But if I look at the entire ESOP structure at Zerodha, I think what has helped us the most, in making it very attractive is that we have never promised a certain return. Now, we have never promised a certain amount of stock options to get people in, right? Because that's when our disappointments creep in, right? So, and then, once you have one disappointed person in your team, then, that it's like it's a virus, so it spreads fast. So we've I think that philosophy of not under kind of promising is I think what has helped us, make this very attractive for everyone in the team.
Yeah, so just something interesting there. We were putting some content together, And I saw this expression in one of the blogs saying ESOPs are a way of sharing profits. And I corrected that to say ESOPs are a way of sharing value. And now, listening to what you are saying, it's actually a way of sharing profits as well. It need not necessarily be about, long-term value creation, linking it to exit events or financing events and stuff.
No, I think it is, see, every business is built a certain way. And I think for every founder who's thinking about this, I think he has to think about doing it the way it feels right for him, right? There is no cut, copy, paste. I am born a certain way, my genetic mix is a certain way. So I feel most comfortable like this, right? But for someone else, it might be something else. So I think it's about doing, what moves the needle for you, but at the end of the day, I think the fundamental thing is, in today's world, your businesses are going to be built by, like it's not like 20 years back, right, where you could have unskilled people and you throw money at the problems and still build large businesses. In today's world, your skilled people, you need them, right? As in your tech team, your product team, they are the ones who are going to build it for you. And so you need to take care of them well, and I think if you don't take care of them well, not just, and take care is not just about money and ESOPs, right? As in, it's just doing what is right for them. So if you don't do that, then I think businesses have a problem.
Going to the other end of the spectrum, Nithin, Zerodha is an enterprise. You're also looking at ESOPs when you're investing in from Rainmatter, right? And these are very, very early stage investments. And ESOPs have a very different color when you have a very early stage startup, a Series A company, a Series C company. Some thoughts on how the Rainmatter startups look at ESOPs?
So the thing is, we have never, interfered in any of, the investments that we have done. See, the thing is, Rainmatter, for us, in a way, that the whole initiative has been more like a CSR initiative, actually. So it is, in our head, it is, we want to grow the capital market ecosystem in India. We want more people to be, doing better with their money and, bringing that money to, formalize financial markets. And we went out seeking, people that we can help, so a lot of these people bounce off, like their ESOP structures, etc. And my typical thing always is, I tell everyone the same exact thing what I said. This is what worked for us at Zerodha, and what you want to do, you should be fair for people who are working with you. That's really the most important thing. And this whole see, the thing is, business is not built in 1, 2, 3 years, right? They're built in 5, 10 years. I don't think assuming that what has happened in the last 1, 2 years and it somehow is going to continue happening, in terms of always some new investor waiting to invest in higher valuation is going to happen, right? So I think you need to kind of build this ESOP plan thinking of a worst case outcome in mind, because a lot of these ESOP plans are usually best case outcomes, right? Even if you look at how people come up with this future valuation of company, it's just like, I've seen some of them, it's ridiculous. I've seen like a company, it says, like the current market, the entire TAM of the market is like some 100 crores, and them saying that, in 5 years it'll be 10,000 crores. Like with no, right? And, and then like saying, I'll be this percentage of this 10,000 crores, so I'm valued this much. So, you can do it for your outsiders, if someone's ready to give you money, but I don't think you should be doing that with your team. You should be fair with your team, saying, what, this is like the best case outcome that we are selling to an investor, but we're going to take care of you, thinking, like a worst case outcome, right? As in, so I think because, if you do it like that, I think, when there are volatility in the business, people stick around, right? As in, they won't jump ship just because there was some volatility, because if you kind of wired all your team for the best case outcome, then the volatility can create impact, right? But if you kind of wired them all for the worst case outcome, then, even the volatility, doesn't cause chaos in the teams, and like I said earlier, your business is your team, and if your team's not going to be, giving it all, then the business is going to go nowhere, So I think, that's how I think. Like, there are different structures, but like I've seen places where founders trying to shortchange, employees on ESOPs. I think that's a really stupid thing to do, because that baggage is going to stick around, right? I mean, no one's going to forget that. As in, if you're dishonest or to your team member, I think everyone will come back. He'll come back and buy for sure.
So just moving into a little bit of detail on vesting, we have traditional vesting model, standard 4-year time-based vesting, and these models were created maybe in the 90s, little earlier maybe, but when it took a particular time to build a business. But now the time it takes to build a business is much longer, and if ESOP has to be at some level a tool that works with the business and works for the benefit of the company and the employee, do you think it is time to relook vesting structures? Maybe in terms of back-ending vesting, some businesses may need front-ending vesting because of hiring challenge at that moment. Vesting structure, should they go to 5-6 years because it just takes longer to build a business? Any thoughts on something like that?
Right. No, I mean, see, the thing is, the way we thought about this whole vesting, I mean, see, people, until we did the first buyback, right, people didn't really even value the ESOP, right? So I think it's important to create, let people know that what they hold is of value, right? And that, I think, can happen only if there's some vesting that happens really fast. Like, do you want to vest everything immediately, or do you want to vest some over time, etc.? Is different. But I think people should know that what they have as ESOP is some value to them, right? Because if you keep like a long 5-6 years vesting, I personally think people even forget that they have ESOP, right? As in, there's something which their stake in the business that can go up, etc.
So what I meant was, instead of saying a 4-year 25% vesting,
right,
would you recommend changing that to say 15-16% every year?
Well, yeah, I mean, I think it is, I think it's different. I mean, every business, I think it'll kind of be different. I don't know if there should be like a standardized, like cut, copy, paste for all business. But this whole 25% every year, is kind of used cut, copy, paste by a lot of,
Exactly.
a lot of things. I don't think so. I think founders should be, because there is a lot of room here, right, to structure your ESOP plan the way you want. It's not like, it's written in like, hard, stone that, you have to follow this. I think, at least what I've seen, even in case of Zerodha was, the first time, I wanted to do it quickly, right? And the way to do it quickly is just to copy paste someone else, right? As in, and most of the times, when we are doing this investment through Rainmatter as well, what I realize is that people want an ESOP plan, but they don't want to think about it as much, so they essentially say, what, this is what's working in the market, let's just copy paste. So once we made the original plan, actually, I think, I said, what, this maybe doesn't work, and we gave it a 6 months time. And then we announced whatever we did at Zerodha. And I think those 6 months, I mean, there was a lot of thinking that went in, just feeling the pulse of people within the business, saying, like, what is that they expect, etc. And yeah, but this whole 4-year, 3-year, 30%, 25%, I think that potentially shouldn't be just, like cut, copy, pasted by businesses. And I mean, if it works for someone, so be it. But but I think founders can get innovative in that. So.
Would you, sticking on the topic of vesting, would you think about vesting which is not linked to time? Individual KRAs or company level events. Just taking a random example: company turning profitable, company hitting some revenue multiples. Revenue numbers, company achieving a financing round. Do you think thinking on those lines is sensible?
No, we have, like I said, every year, the amount of money we're allocating for buyback is a percentage of our profits, right? See, at the core, what the message you're trying to drive with the team is that, dude, we need to be a profitable business, right? As in, and because, and really the way we want to measure our business is, how much profits we make. And that has to be driven into everyone. And this whole saying that, we're going to allocate this much percentage of our profits, for buyback, a lot of people now care about how much profits does Zerodha make, right? Because until we did the first buyback, no one really cared, because it made no difference to them. I mean, Our bonuses also earlier were like a fixed bonus, saying, give 4 months for the best guys, etc. So we have done something like that. I mean, it's a very indirect way of doing it, which is to say, like how much of capital we'll allocate. So people are, kind of driven towards the overall, whatever I'm personally trying to chase as a business. Two, also what we've done this year is that we've said that, so, we have every month, we have this thing called as a performance index, so where for say a tech team, the manager, KA decides, what was their contributions, etc. Every month, every quarter, etc. We measure a certain performance. And so when we're doing buyback, the amount of buyback we offer is actually is based on their performance for the year, right? So our best performer can kind of buyback, participate in the buyback for a lot more than the worst performer, right? I mean, that's something that we put into play because so the thing is, at Zerodha, we don't have any revenue targets, we don't have any sales target, we don't have any, like, for no one on the team, gets up and says, what, I need to generate this much revenue, right? So all the way we measure everyone on the team is using our customer ratings, the quality ratings, just that's how we measure most of the team. For tech, it's more personal of sorts. That's something that we're experimenting this year. I mean, I'll get to know in a while if it actually led to people caring more for their performance, because the performance has an impact on how much they can participate in the buyback. I mean, we could, like I said, I mean, at Zerodha, we are doing buyback, but potentially that could have been investing if it was not a ESOP structure, which was planned like what we've done. So yeah, like I said, I think this whole experimenting what works for you as a business is a good idea. So if it doesn't work, you can always revert it, right? It's not like.
So, actually that's interesting because you say performance will determine how many shares they can participate in respect of the buyback. And equally that determines how many more options they get in the subsequent year, right?
Absolutely. Yeah.
Yeah. So, yeah, I mean, otherwise there's no incentive to give up this year because next year I may get a bigger right. amount, right? So actually that's a great way of looking at things. So you're really aligning ESOP, which is actually a very, very powerful tool, given the amount of wealth creation that can happen with ESOP, to the company goals. Some employees today say, don't give me a salary, give me more stock options, because options have become such a powerful wealth creation tool. My next question actually was, how would you look at it? How any thoughts, recommendations to an employee investing into the capital of the company to the extent of his salary? What would your recommendation be to any team member who wants to do that?
I mean, unless someone is really, really convinced about a company, and its valuations, I don't know. I mean, because like I said, right, we are in the middle of excesses, right? Because companies today are valued like 5, 10, 15, $20 million very easily, right? As in now, will this continue for a long term, is a question, right? I mean, if you as a person believe that this company can keep growing in valuation in the long run, that makes sense, especially for bachelors who don't really have as many cash flow requirements, or even if, like married. I mean, like there are some people who need that cash flow, right? I mean, there is, kids, there are parents to take care, etc. But for those who don't, I mean, and they feel, instead of keeping money in a bank fixed deposit or in public markets, if it's going to grow faster, it maybe makes sense to take some of it in stock options, but I mean, in ESOPs, but it is, like I said, right, it is one of those hit or miss types. And I think what people need to remember, this is very similar to what I would tell to anyone investing in public markets also, is that, in the longer run, only 1 in 100 companies really make money, so in the sense, right, if you look at, I was just looking at this data, someone in the office had shared this, like if you look at all the wealth creation that's happened in the public market companies over the last 25 years in India, I think the top 10% have contributed like almost 90% of the wealth creation, right? So, so are you luckily in part of that top 5, 10% of the companies, right? As in, or you're, just by, happenstance, are you in the company which is not going to do well, right? So, so as I said, if there is, if you're young, there's no liabilities, it's okay. But But if not, I think it's a gutsy kind of a play to take a lot of your salary as stock options.
I guess it's the same question, right? Will I invest into this company if I had the cash? You should look at it absolutely the same way. If I'm already a millionaire, then it's very different.
Right.
If I'm, but I also need to think about what is the right amount I need to save every year, get that balance right in making these decisions, and not be euphoric about things. In the middle of an excess, you're right. I mean, euphoria can drive you to make decisions which are not exactly the most sensible.
Right.
Given the tax structure in India, I mean, I'm just moving to the next topic I wanted to pick your brains on. Given the tax structure in India and around the world, I guess, exercising options results in a tax liability.
Right.
Companies don't often let you exercise options because they don't, it's not standard practice to let employees exercise options, except if there's a liquidity program of some sort. That actually means that you have to allow employees to have a long exercise period.
Right.
Most plans globally would say if you don't exercise options within a few months after resigning or you're being relieved, if you don't exercise the options, they lapse. Right. But now you're not allowing employees to exercise options, and therefore you provide for a very long exercise period.
Right.
Now, once your options are vested, there's nothing which really holds you back.
Okay, sure.
Right. So if somebody else is offering me greater number of options, I will run. Right. Whereas if I have the risk of losing my options, right, I would not, jump ship so quickly. Right. Any advice to companies?
This is the trickiest part of the whole ESOP thing, right? As in, I spent days thinking about it, because, at some point, you have to do what is right for the business as well, right? I mean, we're talking about an employee who's leaving you, and the business, so it's I'll tell you what we've done at Zerodha, right? So at Zerodha, what you said is, if you're leaving, you have to compulsorily participate in a buyback, and that buyback happens at a book value, right? So because I don't want to have this obligation open, right? Saying that someone holds the ESOP of Zerodha or like stock of Zerodha, and tomorrow I'm I don't want that obligation open, right? I mean, that's one of the reasons why we haven't taken outside money as well, right? This whole obligation of having to be answering someone else. I don't mind answering our team, but I don't want to answer an outsider, so that's a stance we took. We said, you are going out, we'll buy it back at the book value of the business, and then it's kind of done, your relationship's over of sorts. But is it the best thing to do? I'm not sure. Because if you have actually, if you take the stance of the employee, then you can say that, for all the effort I did, probably the business will grow in the future as well. And that my effort doesn't end on the day I leave the business, right? As in, you could even put yourself in that shoes and say, maybe that's a right stance to take, right? But it's this part is actually really, really tricky. This whole deciding how you're gonna plan this out. I've seen. See, the thing is, if someone's planning to become like a large conglomerate, and I want to be the next ICICI bank, and for example, I think even with Paytm, for example, a lot of ex-employees quit and they have had shares. They've been transacting on it even before the company listed, right? In the private markets, etc. So like that, there are so many other companies where a lot of shares are trading on the private market. So it's just I didn't think that's right for Zerodha as a business. I didn't think we want to be in a situation where you have people where we ourselves are not have no plans of listing or no plans of getting secondary. We said we shouldn't have any outstanding outside. But for people who do who have plans to constantly keep raising money and keep doing the secondaries or eventually do an IPO, I think it's a very tricky thing. I don't know what's the right thing. Maybe you should like how Paytm etc. let people vest and exercise whenever they want. But the problem is when you have all these, you're a publicly listed company, it's okay, right? But if you're a private company and then you have all these random transactions happening on your company at different prices, it is, I think, it's just an unnecessary bother for a company, when
And this is one of those cut copy paste items. There are ways of solving for this. But unfortunately, we don't see a lot of companies think about this in greater detail. If you think about it, what are the 3-4 key levers in a stock option? What is the strike price? What are the number of options? What is the vesting schedule? And how do you think about exercise? Unfortunately, everything has become cut copy paste today.
No, I'll tell you why it's cut copy paste, and it's almost like a marketing pitch for you. I think there aren't platforms. Like most people are running their ESOPs on Google Docs and Excel sheets, or a chartered accountant is doing it, right? As in, I don't think a lot of Indian founders have a platform to kind of plan and do it well. And a lot of my decisions are also originally because of what is the tool available and what are the limitations of the tool, right? So what you plan is basically based on the limitation of the tool, right? So I think as and when folks use platforms like you, which makes it easier to run a ESOP plan, I think run, monitor, etc. I think people will start improving on the ESOP plans as well.
Yeah, I mean, at the end of the day, compensation is customized to the individual, but options are not.
Yeah, correct.
It's really funny considering that options are potentially much more valuable.
Right.
It's almost a one size fits all there.
Correct.
Jumping really to the last topic that I wanted to talk to you and get your views on is liquidity. First, obviously you're one of the proponents that liquidity should be there for employees. As long as the business is doing well, you reward employees. So I'll move to what I wanted to ask you next. In a lot of Indian companies, the company controls liquidity. It's fine for the company to control liquidity because you don't want you want to be sure about who's on your cap table. Once you're a public company, it doesn't matter. But when you're a private company, it really does matter who's on your cap table, whom you're answering to. You don't want any back-ended deals. But would you recommend structures where there is a framework that the company provides, the enterprise provides, on how the employee gets liquidity? The framework could include detailed guidelines on who can come in, who can go out, windows. But the company itself doesn't determine or provide the liquidity. Company doesn't take on the obligation. Company may do it if it's in a position to do it, but company is not company is not obligated to create the liquidity event. In the current structure, the company is putting itself in the position where it is the only person providing liquidity.
No, I think like for this whole scene to get more vibrant, I think that has to happen more, right? As in, like even in the US, I think there is such a large secondary market for like unlisted companies. So I think of course, I think there's an opportunity in India for for platforms to actually do this, make it easy for companies. I don't know if companies on their own will take the effort, like I said, because this is a lot of effort. So I think you need standalone platforms to come in and kind of fill that gap, saying, what, I'll help you manage all your ESOP. I'll make sure, these are the kind of people who can come on your cap table. I'll manage all these, rules you want, in terms of restrictions and how many max you want an individual to be holding on your cap table, etc. Right? As if standalone platforms can do it, I think I don't see why companies wouldn't be, interested. Because because at the end of the day, like I said, right, companies would want people who work to know that the ESOP given to them is of value, right? If there's no money attached to it, it's almost like this share certificate on the wall. I mean, it's just something worth showing, as in it's no value.
Yeah, and you don't want a transaction in the primary space happening at X and the buyback being at 30% of X or 40% of X. So
yeah, as long as company can set all of those rules and allow transactions to happen. And I think even in this budget, for example, this whole finance minister talking about that, I mean, directionally talking that what LTCG on unlisted companies is probably going low. Like even after that announcement, a lot of my friends came in, called me up and said, what, I mean, it's not like a big difference, right? As in, it's come from 28 to 23 that LTCG on unlisted, including surcharge, right? But that interest is there. Certainly, like what is government going to continue bridging that gap for public and private companies, right? So, and if government's taking that stance, all the talk about tech startups in the in the budget, right? As in, if government's going to make it more conducive to investing in the startups, I think there has to be platforms which make it easy for companies to run, like a ESOP liquidity programs. And so I'm super. I personally think there's a large market here, for the future.
Some crystal gazing, Nithin, on what the option market would look like in the near term, in the medium term.
I mean, see, the thing is, if you actually look at all the valuation that's getting created, the hundreds of unicorns now. Sorry, 100 unicorns. I mean, there is a lot of valuation in terms of ESOPs, right? As in, I don't know. I mean, I haven't really sat through and thought what is the absolute value, but I know it's billions of dollars, and I think, like, personally, my bet, knowing a lot of founders in the circle, is that they want people who have helped them to get some liquidity as well, and it not being just paper value, right? And so when the intent is there, and there is a lot of demand outside, in the HNI circles, and of wanting to invest into some of these companies that are growing fast, because I think by the time companies come to public, they're already probably priced in terms of valuation, right? As in, the best case outcomes already priced in. And that's not just in India, right? Like I said, even Twitter has grown 11x and stock price has gone nowhere, So it is, because, so that's what happens, as soon as companies come public, they're actually, the IPO is really factoring in the best case outcome for I don't know how many years, right? As in, so a lot of HNIs that I know, want to have a play before companies go public. So there's a lot of demand for private companies. I think the need of the hour is just, and there's a lot of intent, as I said, from the promoters and management team. I think the need of the hour is to have a platform that makes it all easy, So.
Any final words of advice for founders, for employees?
Yeah. No, for employees, I mean, like we spoke about, taking all money as, all the cash component from ESOP is probably a really risky thing to do. And like you said, I think you should do it only if you do it with your own money, and not look at ESOP as, play money, because like I've seen a lot of people think of it almost like, like monopoly play money types. It doesn't, eventually, at the end of 10, 15 years, this is, the decisions you take here is going to have significant outcomes, results, and etc. So for founders, I think, you need to do what's right for their, employees, because at the end of the day, like in today's world, if Zerodha is what it is today, it's because of the top 50, 70 folks, especially, who have helped Zerodha reach there. Now, if you try to shortchange them, it's bad karma. It's going to come back, So it's, so I think you need to do what's right for the team, for the employees.
Great. Thanks a bunch, Nithin.
No, pleasure. Thanks, Srini.
Thanks.